I don't see how we're at the beginning of a great stock shakeout, Scott, only because of how much damage has already been done, arguably where it should have been expected to have been done. And by that, I mean, going into today, the S&P 500 was within 2% of an all-time record high. You had Spotify go into the day down 35% off its high. Teladoc off 44, Zoom off 47. You go down the list, these are all the live by the gun, die by the gun situations. And as we've talked about before, they are in a highly specific area of the market with all the same funds and investors involved with them. And they're not terribly important to the major averages. I know it doesn't make people feel better that went all in on these names, but you just look like DoorDash, 50% drawdown, Snowflake, 53, Teladoc, 40. That didn't happen overnight. That shakeout has been in progress since the end of January, I would say. And it's interesting that rates have cooled off because this was never about rates. Remember what I've been saying since October is what it would really be about, which is an excess of supply. So all I do all day is sit alone in this room, listening to Nas and reading S1s. And the deal quality is falling off a cliff. Like every new company coming public is slightly worse than the same version of it that came public 2 weeks earlier. There's a story at Reuters today about SPAC pops. There were 15 of them that went public in the last week. Only one of them is trading above $10.
Let me do
where
this.
They all come out.
Okay,
that's what's happened.
Your points are obviously well taken. Okay, yeah, this may have started a while ago in some of those high-flying momentum names and a very specific part of the market. Our question today, though, is whether it's now spreading elsewhere. Let me just roll out some ideas, and we can debate them for our viewers. All right? The number, Josh just talks about the number of SPACs that are under $10. 34 of the 50 in the CNBC SPAC 50 are currently below $10. So, right, it's not just a few. It's 34 now of 50. The well-documented pullback in the ARK funds, they've been crushed lately. The momentum hit, those stocks have been crushed. Well, what about the Russell that we were talking about, right? Small caps lead you on the way up. The Russell had a monster run, okay? The Russell 2000 stocks are selling off. Names like Caesars and Penn National, those are down 12 and 11% respectively month to date. I've got Wingstop in there, AMC, Cinemark, The Real, you know, names like that. And then I go even some of the recovery stocks have been pulling back of late. Boeing this week alone is down 8.5%. The airlines are down in most cases double digits. I've got the cruise lines down double digits midway. I've got the casinos down this week 9% or so a piece. I've got the hotel stocks down this week alone as well. So, Pete, that tells of a more perhaps broadening shakeout of stocks.
Yeah, I think to some degree, Scott. I mean, we've watched this transition, and each and every day, not just every week, but how about the fact that each and every day we see, well, today it's energy, industrials, financials, materials, right? They're leading to the upside, then they seem to be pulling us to the downside. And it's been that back and forth that we're seeing, and some names it's definitely stuck a little bit more than others. There are some areas of the market, though, Scott, that have stood out, that they've actually traded much better maybe than previously at least looked upon that they would. And they really are starting to perform really nicely. I think there's some names, for instance, in the retail space that are trading really nicely. Maybe they'd been lagging. Maybe some of these names hadn't really participated to the same degree. And I think that's what we are seeing. It's, again, a healthy thing, I think, but it's a bit of a rotation that we're seeing. It just is multiple different areas where we're seeing a bit of a rotation. Not a full-blown getting out of something and getting into something else, but just some migration, which I think is very healthy for what we're seeing in the markets.